Good evening, everyone. This is James coming from Dividend Stock Talk, where we talk about dividend stocks for monthly and weekly cash flow. Why do we do monthly and weekly cash flow for our dividend stocks? Because we get bills every week. Every week I get a bill coming in. Bill for this, bill for that. Electric, water, credit card, car, house, insurance, all that kind of stuff. They come in all the time. You need to take your money that you earned. Now, I've been working since I was 13. I'm 53 now. That's 40 years. Okay? 40 years of working. I should have the privilege of taking whatever money I have and making it work for me. Because as growing up, everyone teaches you, you got to get a job, get an education, get a good job, put your hours in, then retire. You're trading your time for money. That's basically what you're doing. You're trading your time for money. That's like I've been working lately, helping out my dad, doing a few things here and there, and I leave my house and it's dark in the morning. I leave, first thing in the morning. And then after I'm done, I get back home, it's dark again. The whole day is gone. And what do I get? A few $100. Big deal. Yeah, I'm helping my dad out. It's a nice thing. He's still here. God bless his soul and all that kind of nice, neat, fun stuff. But I'm trading my day. My Monday, I traded for X amount of dollars. I no longer have that Monday. Did I get anything done Monday for myself? No. All I have is a couple $100 to show for it. Anyway, what I'm saying is at some point in time, you're going to take whatever money you have and invest it and make it work for you. So I could spend, half hour here, my computer did, and then boom, I get a couple $100 out of that. Same thing as if I worked 8 to 10 hours helping out my dad or working somewhere else or getting another job. Same thing, same concept. Couple hours, investing, watching everything and learning how to do it. And then, boom, it's the same amount of money. I trade 8 to 10 hours to do that. Work manually or whatever it is you do. And then at the end of the day's gone, you got nothing to show for it. At least, clicky on the keyboard and investing properly with something you know how to do, something you're comfortable with, it's the same amount of money. So it makes no sense to me. Why do I want to work? I don't want to work. Don't get me wrong. I enjoy working once in a while when I feel like it, when it suits my fancy. All right. It is 11:03 here. I've been rambling on for a little bit. It's 11:03. It is Sunday, September 24th. Wow. And it's, 11:03. I already said that. Okay, so last week we did rather well. I think we got 2.5%. 2.5% return for 1 week last week. That was good. The week before we did a little bit better. However, I'm only shooting for 1%. 1% is my goal per week. Now, a lot of investors, they'd be happy with 1% a month. 1% a month, usually right around 12% a year. And that, my friends, is double-digit return. Okay, most people, all right, I'll give you for instance. If you're going to take all your money and you want it to be safe and secure and all warm and fuzzy and no risk whatsoever, zero risk, take your money and put it in the bank. What are they going to give you? What are they going to give you for the privilege of using your money for the whole year? Because that's basically what's happening. You're giving them the money, and then they're seeing fit to invest it however they choose. But they're giving you a guaranteed rate of return. Now, how much are they giving you? They're giving you negative 2%. That means you're paying them to keep the money there. Now, realistically, it's not the way it works. They give you a return right now. The current rate is around 1%. Okay, so you dump all your money into this, and they're giving you 1% return for your money. So if you put it in $100, at the end of the year, 12 full months to the day, they're going to give you $101. And what is your $101 worth? It's worth $98. So you're actually going backwards. Because every year, inflation, the price of gas, the price of food, the price of loaf of bread, the price of eggs, and, everything goes up. Housing, insurance, taking a girl out on a date, everything goes up. Everything gets more expensive. I remember cheeseburger when I was growing up was 27 cents. My weekly allowance was a quarter. I got a quarter for this was like 1972. I got a quarter for depressing. All right, nah, I got a quarter for a weekly allowance. It was kind of cool because we would you get our allowance, and it was a weekly thing, and then we'd get it, and then we'd go to the dollar store, not the dollar store, sorry, the penny candy store. They didn't have taxes on candy back in those days, so for 25 cents, I can get 25 pieces of candy. Okay, now if you think, all right, if I was a child now, my weekly allowance would be around $10. Okay, that's what I used to give my kids years ago. But anyhow, anyway, between $5 and $10 if they did all their chores and stuff like that. So what can they do with that $5 or $10? They can go to the candy store and get 25 pieces of candy. So has anything ever really changed? No, not really. The weekly allowance equals 25 pieces of candy. Okay, there you go. Well, my weekly allowance was 25 pieces of candy. Not really, but you know what I mean. You give your money to a bank, they're going to give you 1% return. Okay, inflation equals around 3 to 5%, depending on where you live. It might be a little bit lower, it might be a little bit higher. But give or take, let's say the average, 3%. So your $101 is only worth $98. All right, so that being said, you could take your own money and invest it however you choose. Okay, you say you're not good at it, you don't know how to do it, you don't know what to do. Fine, sit back, relax, we'll show you everything you need to do. And if you're not comfortable with what I'm going to show you, fine, there's somebody else out there that you'll be comfortable with. Just do something. Take responsibility for your own money. What is the word for it? Be accountable. There you go. Be accountable for your own actions or inactions. All right. So as I was saying, I shoot for 1% return per week. So average out a little bit more than 50% a year. Now you say there's 52 weeks in a year. Yeah, there is. But you get the first weeks of the year, and then the last weeks of the year, then you get interest on interest upon interest upon interest. Because you start with a little chunk of money, and then you get 1%, then 1% plus on one time upon 1%, then 1.2% upon 1.2%, and then it's 1.3%, and it slowly goes up and up and up and up. By the end of the year, that 1% return per week is a lot more than the 1% per return per week January 1st. All right. Anyway, that being said, let's skip all that crap and get to where we are, what we're doing. All right, here we are at our account. Now we're at 6224. Okay, so if you've been paying attention, last week we were at 59, 50 something. I don't know, it was close to 60. Okay, I'm pretty sure it was close to 60. I don't know. If it really, I don't really worry about it that much because it is what it is and it fluctuates, up and down, up and down. So I really try not to get too caught up with what's going on, But as long as I'm making at least 1% a week. All right. So this week it's 62.46, 461, something like that. Okay. So Monday we're gonna check and see what we got. So we figure out what we're going to play with. Now this is interesting. BMY. Let's open it up here first. BMY. Bristol Myers Squibb. I thought I got rid of BMY because I had some options on it, and I could have sworn I sold an in the money call for a covered call, so that somebody would buy this thing from me. All right, so I'm into Bristol Myers Squibb for $62.50. All right, she starts out the year $50.60. It makes the low of the year right about here, which actually it's not the low of the year, but it's close to the low of the year at 46. But it travels in this range for about a month and a half, and then she, what date is that? All right, a little bit after. Okay, a little bit before the election. Okay, so she jumps from 49, right around $50, and she jumps up to 58 to 69 area. Okay, so she travels that way for what looks like a good 6 months. She travels up and hits the high of the year right in mid-July at 77.11. Okay, from there she gaps down from like 75 to somewhere around 61. So that's like $14 decrease, right? Overnight. It's like, oh, I hate to be on that. Hate to own stock at that point. But you got to think about it. the stock's here at 62. You got a bunch of people buying. Okay, great. It goes from 62 all the way up to 76. Now this could be a channeling stock because there was a nice little channel right here. You know, from 6 months, it ran in a nice little channel between, 58 and 69. It's a nice little channel. It hits the mark, hits the low marks, hits the high marks, and boom, you're out. So all of a sudden, she breaks out of that. She hits a high of 77. Okay, from 70 to 77, that's 10% in a very short period of time. Great. Let's take some profit because it's never been this high before. Take the profit. Boom. What happens? Right back down to the $60 area. Hey. All right. Anyway, that all being said, she continues dropping down until she hits like 48, and she seems to bounce off of the 48 area. As you can see at the beginning of the year too, the 48 area was kind of like its support area, so it doesn't want to go below that. But it did test it out right here, would hit a low of 45.95, which is around 46 bucks. It's not a lot lower than the 48. And oh damn it! No matter what happens, no matter what time of day, and I'm going to apologize for you, I have the camera on, and for some strange reason I'm yawning. I don't know. Am I boring? Who knows? All right. That being said, so she's in the trading range now for the past 5 months between the 53 and the 57. So she peaks out of that a little bit, and she's at the 63.36. So I got 1,000 shares of it. So let's create a closing order. Oh, wait a minute. Don't want to do that. I'm going to put BMY in there. BMY, Bristol Myers Squibb, and all the interesting stuff's going to pop up. All right, now, Bristol Myers Squibb has weeklies on it. So let's sell a weekly single stock. So this is just going to be a covered call. See, we already own 1,000 shares, so that's 10 contracts, and the stock is at 63.36 right now. So if I want to sell the at the money one, was 63. You know what? I bought it at 62.5. I bought it for 62.5. I could sell it for 62.5 for $1.08, or I can sell it for 63, which is 76 cents plus the additional 50 cents, which is the difference between where I bought it at 62.5 and the 63 strike price. So you have 62.5 and 63. The difference is 50 cents. So if I sell this one, I get the extra 50 cents over and above what I bought it for. If I sell this one, yeah, I get a little bit more money up front, but I'm selling for the exact same price I bought it for. Okay, so I'll be raking in about $1,000 for that one. 10 contracts is about $1,000. This one, let's see what this one is going to be. Should be like $760 plus the 50 cents over and above the 62.5. So 1,000 shares times 50 cents, that's $5,000. Oh, no, it can't be $5,000. Is that right? 50 cents times 1,000. That's $500. So if we add $500 onto this, that comes up to 1360. Okay. If it stays, look where it is. It's at 63.36. So if the stock goes up, I make all my money. Stock stays where it is, 63.36 right up until Friday, I make all my money. Okay, and if the stock even goes down, if it drops from 63.36 to 63, I'm still going to be bought out. It means I still make all that money. So what the heck? Let's go for it. Let's do that one. That works. 10 contracts. The 63 call at 76 cents, limit order to open. Or I could do it at the market. Yeah, I don't want to do it at the market because you never know what the market maker is going to open it at. Okay. Here I am. It's above 63. And there's a possibility. It's got the dividends coming up next week, I believe, because we bought this last week, or it was 2 weeks ago. Uh-oh. Anyway, that's really irrelevant now because I already own the stock, which means I already collected the dividends on that. Okay, because I already carried it past the EX date and the date of record, and I still own it. So this would be the third on this second covered call I did on this stock. Okay, we got a nice little chunk last week. Then we get another nice chunk this week. We're getting 760 this week. And if it stays above 63, we're going to get the extra $500 for the difference between the 62.5 and the 63. Okay. So, and we collected the dividend. So that's great. You know, you buy the dividend stock. I like buying dividend stocks that have weekly options because it gives me so many more things I can do. You know, I can buy it before the EX date. I can sell it for the increased value. I can sell off the options. I can sell someone else the privilege of buying it from me for the exact price I bought it for, and I can collect chunks of money called premiums for selling something at the exact same price that I bought it for. It's crazy, in my humble opinion. But there's always that chance that the market maker could wake up and say, you know what, I was so wrong. This thing's only worth, you know, $25 a share. And here I am buying it at 62.50, you know. But that's a chance you take when you invest. Now, the nice thing about dividend stocks is no matter how wrong you are, if you buy this stock at 63.36, or even where I got it at 62.50, and it drops almost to the floor, as long as the company is profitable, I'm going to continue to collect the dividend every 90 days. Now, this company pays out every 90 days. So every 90 days, I'm going to get a check from the company for 1,000 times whatever the dividend is. If the dividend is, you know, 50 cents, it's 1,000 times 50 cents because it's 1,000 shares. So that being said, when I invest with dividend stocks that have weekly options, I have that privilege of doing that. You know, I'm buying it, I can collect the dividend, I can collect premiums from selling options against the stock and collecting those premiums as well as the dividend itself. And if the stock goes up from the time that I buy it to the time that I sell it after the EX date, I mean, date of record, great, more the merrier for me. All right, I'm really babbling on here. I'm just going to get to what the trades are this week and, you know, go from there. Okay, so this is the trade I'm putting in right now. 10 contracts at 76, confirm, and the most I'm going to get out of this one is 751, and of course the difference between whatever I sell it for and what I bought it for. Okay, because the credit is $760. That's the option premium. That's what someone is paying me for the privilege of buying it from me at $63. Okay, and I'm going to collect $751.25. Thank you. Oh, there it is. As simple as that. All right, let's go to the Market Watch and see who's available for Monday. Okay, so Monday is 25th, and there are no companies that have weekly dividends on the 25th. But what we could do is we could clear the filter. See, there's 12 companies have an EX date on the Monday. Okay, that means had you bought any one of these stocks, you should have been out of them Friday. Friday was the last day the stock traded before the dividends paid out. So see these dividends here, like this company right here, LOGI, Logitech International. They're paying a 64-cent dividend. Okay. The announcement date was the 12th. The EX date is the 25th. The date of record is the 26th, and it's payable on the 27th. And that's freaking awesome. You know, you buy it Friday. It goes EX tomorrow. Tuesday's the date of record. Wednesday, they say on the checks, you can sell it on Wednesday, you know, for hopefully more than you paid for it in the first place. Or hold it until Friday, sell the option against it, and collect that premium also. So you're collecting the premium, getting rid of the stock for more than what you paid for it, collect All right, I already said that. Collect the premium, sell the stock for more than what you paid for it, and collect the dividend. Triple bingo, whatever you want to call it. Hat trick. There you go. Hat trick of the stock trading world. Okay. Anyway, that being said, that's a possibility. Okay. So you got these 12 companies going EX on Monday. Tuesday, we got these 7 right here. I mean, they're not going to do you any good now because you already had to have been in the position. Well, actually, the companies here on Tuesday, you can buy any one of these tomorrow, which is Monday. It'd still be eligible to collect a dividend. All right, now look at AHH. Okay, they announced it on the 8th, 8/4, which is August. Yeah, August 4th. The EX date is the 26th. Data record is the 27th. And this one's got payable. You don't get the check for about a week on this one. But, hey, the date of record and the EX date only has a 1 date difference. So you can buy these first thing Monday, get rid of them on Wednesday, and move on to the next stock. And then Wednesday, here you go. Look at this. You sell that stock first thing in the morning. Second thing in the morning, you buy one of these guys. SCS, which is Steel Case, Singapore Exchange, NAM Type Properties, MFA Financial, so on and so forth. All right. Those are all those companies. And 185 of them on Thursday. You do the math on that one. I just stick it into the software. Go from there. So, that being said, let's look at who we're looking at. So none of these guys are going to do me any good whatsoever because they're going EX this week. Actually, this list right here, I could probably squeeze some money out of these guys here because you have to get rid of this stock by the close of Friday, okay? Because Friday is the last day the stock trades for these 43 companies, okay? Before they pay out their dividend. Now, I can't tell you when they pay out the dividend because each company is going to be different, okay? Cardinal Health. The EX date's the 29th. The date of record is the 2nd, which is like Tuesday. Okay, something like that, Monday or Tuesday. And it's not payable for 2 weeks after the date of record. Okay, that's that one. CBU, CubeSmart, they get 27-cent dividend, the same thing, 29th. Date of record is the 2nd, and it's payable the 16th. Okay, so if you buy any one of these companies first thing Monday morning, you can. You know what? I'm good. Because you really can't do it with any one of them because you have to find out which one has weekly options. Okay? Only one on Friday has weekly options. So let's just take a look at that one because we have to be in and out of that one. Cardinal Health. All right, Cardinal Health, and see what kind of play you could possibly do first thing Monday morning for that. Ooh, look at that number, 6666. Some people are superstitious. I'm really not. All right, this thing starts out the year. It looks like 63.45. Now 63 seems to be, if you look at this particular chart right here, this is just a 1 year chart. Sorry, let's change that. There you go. This is a 1 year chart. Okay, that last one was I think a 10-year chart with every 2 days. All right, so here's your chart for CAH. Okay, she starts out the year at 77. Quickly, within 2 months, finds a low at 62.75. Once it finds the low, it bounces back up, and it slowly goes up back to that trading range of 76. But it continues past 76, trades at 81, 82 for a while, and also hits a high of 84, 88. Travels about a month and a half, almost 2 months at that time, at that price range. Okay, then at the beginning of April, she goes from 81.66, drops all the way down to 72. So that's like a $9 to $10 drop in a day. You know, the market maker wakes up one morning and says, wait a minute, whoa, I haven't had my coffee and I don't think this is going to be sustaining this price. Let's drop it down to 72. All right, that's what the market maker does. He's having a good day, great. Having a bad day, this is what happens. It's from 81.70 down to 72. Okay, she travels in that area for almost 2 months and slowly works its way back up to 80s. Okay, didn't go any higher than that. Came back down, settled around 77. Traded a month at 77 area, dropped down to test the waters again at the 63s. Okay, she's been trading sideways for the past couple of days. Now she's at 66. All right, so let's see what they're offering. CAH. Let's see what they're offering for a weekly call spread vertical. Thank you. Okay, so it's at 66.66. I'm going to go for the 66.50. Okay, that's what I'm going for right there. She's paying 37 cents. So 10 contracts, buy the 66, sell the 65.5 for a debit, which means it's going to cost me 37 cents per share. If I do if I do 10 contracts, it's like 1,000 shares. Okay, now, you know me, I like to go 50 contracts. It makes it worth my while. You know, who wants to, put the effort in and only get 50 bucks? Nope, I prefer 500 bucks. I prefer 1,000 bucks. Because I'm not looking to get a whole bunch. I just want 1% per week. That's my goal, 1% per week. All right, so that being said, all right. $50 contracts, CAH, weeklies, 29th of September, 2017, the 66.50 call at 37 limit to open. All that fun stuff. The break even is 66.37. Do you see where she is now? It's almost like a 30-cent spread. It's like a 29-cent spread between where it is and my break even. So she can drop down to 29 cents and I will break even. But if the stock goes up, all right, maximum profit I'm looking at 650 bucks. And how much is it costing me to make this trade? 1,926. Okay, so this 62.50 is pretty close to 30%. You heard me, 30% return for the short period of time. Now you're asking me, or you're probably thinking to yourself, all right, then why don't I just buy more contracts? Okay, buy more contracts, what happens if it goes the wrong direction? Then you ended up buying all those contracts, actually fulfilling all those contracts. Okay, so if this goes the wrong way on me, I have two choices. Take possession of the stock or lose the money. If I'm taking possession of the stock, I better make sure there's enough funds in my account to actually take possession of all those stocks. So 50 contracts is, 5,000 shares. So can I do 5,000 shares at 66? Yeah, that's the only thing I'm buying. Okay, so as long as, so he's at 66.66. So this spread order right here will basically, if the stock goes up, I make my 30%. If the stock stays exactly where it is, I still make my 30%. Okay? If the stock goes down, which, stocks go up, they go down, they go sideways all week long. I mean, look at them all. Have you seen anything going sideways? It's perfectly straight. I'm going to even, let's send that order. Bring that back. See this, every single one of these ticks is a different day. Okay, you start off the year right around 78, and all of a sudden, a month later, here you are at 62, almost 63. That's a big drop in price. You think to yourself, wait a minute, this is where it was, this is where I want to be. Why is this happening? Okay, I got the investor, sitting there overseas trying to think, hey, I want you to do something with my money, but I can't do anything because the stock price dropped, the price went up. Anyway, it is what it is. Make sure you have enough money in your account to buy the shares just in case you get stuck with owning it. All right, it's 11:30, like a half hour. CAH, that's what we're looking at. So as long as the stock stays where it's supposed to stay, we will have no problems whatsoever. Okay, every day there's a new company coming on, so we will see who is next. All right, let's check, see if we have any questions. If not, I'm going to call it a night and start again tomorrow. Questions? No questions. Awesome. All right, so that's interesting. Interesting also. You know what? That's it. I'm out of here. Interesting. All right, well, no questions, so I am basically done for the evening. We took a look at what's going on for the next week, and we will catch you tomorrow for tomorrow's show. So make sure you're here, Dividend Stock Talk with James, and have your questions ready. Hit me with your best shot. Let's see what we got. This is James. I'll talk to you later. Have a great evening.